All right. Good morning, everybody. Hopefully, everybody had a nice weekend. So I was just going to the news. Nothing really stands out economic-wise, but there was on the Russia-Ukraine situation on Saturday. It had seemed like they had found some middle ground and that the talks were going really good. At least that was what was kind of implied on Saturday. Between then and now, however, there's been accusations of war crimes. They are scheduled to meet today, not in person. It's still video talks, but there could possibly be some news out of that. So now all the nations are looking for new ways to sanction Russia. And like I talked about last week, if they hit a nation with sanctions and they don't continue to change those sanctions and make them harder and harder and harder, then a nation will just adapt to those sanctions. So they have to continue to turn the screws, so to speak, and just keep the pressure on. I'm not much of a gold person. It's just never really been my thing, but I was going through and kind of reading articles yesterday on gold, and we had sanctioned Russia's gold, which I found to be interesting. They have the 5th largest stockpile of the world, and then we sanction it and they can't use it. And yet the consensus seems to be that they'll be able to get rid of their gold anyways, because one central banker, wink, wink, nod, will pass it off to another central banker in another nation at a discounted rate. We'll have to see what we see out of that. Keep an eye on Bitcoin, though. This is one of the things that continues to just amaze and surprise all of us. We don't understand the effects of how much Bitcoin is changing the game. But when you have a nation where its currency is blocked and sanctioned around the world, knowing that they've got access to something like crypto, just keep your eye on it. So for today, there's not a lot of central bankers scheduled to talk, and not very much on the economic agenda either. $10 o'clock, 10:30, 11:30, 12:30. If you were to go look at these on FX Street, for an example, they don't hold a lot of anticipated impact in the market. Now, don't misunderstand what I said there. They can move the market, absolutely, especially the additional auctions at 11:30. Typically, when we're in the lunch cycle, we expect to see a range-bound market. We expect that challenges against support and resistance fail, and that the market stays in that consolidation phase until the end of lunch. Except on days like this, where we have an additional auction at 11:30. Sometimes they're at 11, 11:30, 1 o'clock. We've seen days where they're on all three. Today it's 11:30. Really watch the clock today, especially since it's Monday. There's a market logic that says everything you need to know is priced into the market already. It doesn't matter if you believe that or subscribe to that theory. Over the weekend, lots of news comes out. It needs to be priced into the market. So on Monday morning at 9:30, the market starts pricing in all of that news. By the time we get to lunch, we've pretty much got all of that news out of the way. No matter what kind of day we've had from the open to 11:30, it can all radically change at 11:30, especially if it's been doing one thing consistently all day. So if it was a good strong trend, we'd expect that trend to die off and or flip over. If it was a range bound market, then we would expect that range to end and a trend to begin. It's really hard to go back and prove this logic, right? If you go back and look at the charts, you don't see in the candles if there was an auction that day. You can just see movement on the chart. Hate to say you got to take my word for it, but you actually don't. Um, we do the morning briefing every day and point out where there's economic events. If you were to go back and watch the morning briefing in the first 10 minutes of the video, I show this part of the screen, mark out every one of those additional auctions and look at when there was a radical change in market sentiment at that time frame. You'll notice I'm not just pulling rabbits out of a hat. There's a little bit of logic behind all of this. Makes sense. The weekly expected move is slightly smaller than last week's, and I know this looks very cluttered. It's probably hard to grasp what we're looking at here. This is the new week. This was the last week. And so you can see those are very close together. The new week is just slightly smaller in size. That implies that there is less volatility this week than last week. That this is a forward-looking indicator. It's one of the few indicators that you could ever use in the marketplace that doesn't look backwards. It looks forward. This is anticipating the type of volatility it is expecting to see, right? It's not telling you what volatility we already had. The market makers are projecting less volatility in the new week than we had last week. Cool. I don't believe it, but we continue to maintain inside the box. You can see last week we got to the edge on Tuesday. I did short that just like I normally would, and it worked out really good. When the S&P gets to the edge of this box on a Monday or Tuesday, instinctively I just go the other direction. It doesn't work all the time, but it works often enough for me. There is some Twitter news this morning. Apparently, Elon Musk bought a 9% stake of Twitter because he wants his own social media company. And I think he decided that it would be cheaper to rebrand or rebuild Twitter than it would be to start all over again. That makes sense. He says he's a passive investor, but I've never seen that guy do anything passively. He seems to be aggressive, strong minded, right? I can't really see him spending that kind of money and then sitting on his hands and just being happy that he owns some part of some other company. I don't think so. Something to think about. The $43 area seems like a good place to buy puts. We are above the yearly open. And if we were to fade back down from that open of today, which is like around 50 something dollars, then 43 looks to be pretty good. Looking at the ES this morning, we've got a range bound market. We are up slightly, and I mean just slightly on the morning. Double topped, a little micro double top, and a little micro cup and handle. Isn't it cute? Just some tiny little thing. Some angled resistance. We want to game this out. We don't really have any economics this morning to deal with, right? Nothing really big supposed to come in and like pull a Will Smith slap on the market. So what do we got to work with? Suppose the market likes this news that's coming in this morning and we see a move to the upside. We want to game that out and say, what would that look like? We would first need to break through the 45.50. That'd be our Globex high area here. If we get past that, then we have Friday's high, not the intraday. We're already past that level, but the all of the high of Friday. So the Globex high, 45.55. we're not that far away from it. At least we weren't earlier, right? 5 points away. So if we happen to get past that, we'll start focusing on Thursday. Now, Thursday has a lot of trash in the higher portion of Thursday, not much in the lower portion of Thursday, right? As we got into the afternoon and we fell into that shallow volume profile, we moved through that area really quick, just like we had talked about was likely. If we were to have break that support, that we would move through that area with some speed, and sure enough, we did. Right? That's why we come out and look at this volume profile. You can see that the point of control is holding well this morning, and we are inside the box. If we are to break outside of Friday's levels, we would also be breaking outside of this box. And there's a nice shallow area that says we could. There's no real volume resistance over our heads. There's a little bit of concern around the 4570 area. It's the same area that was holding us up before until it failed. We left some volume nodes there, so if we get back there, it's going to be a bit of a resistance. I think that's a little bit of a stretch. 4570 from our current location. Looking at it's not than a half of a percent. If there's enough economic news to get above 4570, then we'd be looking to see the market pull back and rest against that. It's interesting that there's a firm out there that said the bear market rally is over. Now, that wasn't a bullish statement, by the way. So make sure you grasp the logic of this. Careful with headlines. Morgan Stanley says the bear market rally is over. They're saying we're headed back down. Now, this is just one Joe Schmo that works at Morgan Stanley, right? Take it with a little bit of grain of salt. Just keep in mind that the analysts out there right now, at least one of them, thinks that there's still a lot of reasons to be bearish, to be cautious, and that this bear market rally was nothing more than that, and that we were not going back to the highs. Okay, whatever. It would take a significant amount of news to get us up into the 45.80, 45.90 area. I just don't see it happening unless there is some news. So it won't be a surprise. It won't be just like a slow grind up there. Not today. So if that's our upside push, then what's the next scenario? Well, the next scenario is that we could just stay sideways. We have our own Globex low, our Globex high. This is a relatively decent range. It's around 20 points, 25 points maybe. And we could very likely just stay there all day. I got to say, I don't believe that, not even a little bit, but it could happen, right? Well, hopefully, we've all learned by now that the market could do whatever the hell it wants. And so we don't want to think that it can't do something, just that it's unlikely to do something. So it's unlikely to stay inside of that range. But that is one of our scenarios. The third scenario is that we break Thursday's low and we challenge Friday's zones, Friday's areas, which would put us through the cog line at 45.11 and then down to 4500. Now, to get there, we'd have to break our own Globex low. But if you didn't catch it when I said it, that's Thursday's low. Not to the penny, not to the tick, but I mean, if you were to mark that out with a fat crayon instead of a skinny pencil, it'd be just about the same spot. It's a little bit of a zone, right? It's like a last line of defense. Now, you really can't see it because I'm zoomed in tight, but there is an inverted head and shoulders in Friday's price action on the 30-minute time frame. And if you were to measure that out, it actually plots us somewhere around that 4600 area. $45.70 is a little high. Now, the argument could be made that we've already got our head and shoulders distance. More than one place says when you measure head and shoulders, 50% is all the head and shoulders owes you. If that's the case, we've already made it. We made it in the Globex and we've pulled back since then. If there is going to be 100% of the move, then it would still need to get through Friday's high first to get there. I think it's already done. Just don't be misled by that head and shoulders. For the Nasdaq. By the way, there was an absolutely amazing falling wedge play Friday in the indexes. I hope you guys got to take advantage of it. Called it out in advance. Had all the time in the world to see it. It was a beautiful play. God, I hope we get another one of those today. That was awesome. So for the Nasdaq this morning, there's a little bit of a consistent, persistent move. You can see the wave form here, high and low. That liquidation break at 2 o'clock this morning was a little bit extreme, but managed to recover it and come right back up off the other side of it. Pretty phenomenal. So when we're gaming this out, I kind of want to ask the same questions that we did on the other one, but let's just start with the weekly expected move. Yeah, we're back on the daily with this really ugly chart. I know it's cluttered. It's kind of hard to grasp what's going on here. We're zoomed in that tight. So that's last week's expected move. If we were just to copy that box and set it on this week's, you can see that this week's lines are smaller than last week's lines. So there's an implication of less volatility. I don't know about you guys, but I don't feel like there's less volatility, right? I know nobody cares about what you feel. Nobody cares about what you think, but it doesn't feel like it's less volatile. We are primed for a trendline breakover this morning. By the way, this is like the bread and butter play. If we get a trendline break, the top side of 15,200, that's the target. That's the weekly expected move high. When it comes to the futures, I don't normally swing trade the Nasdaq. The buying power reduction is a little bit rough. I swing trade the MES, but I do like that setup. You can see that we're inside day right now. We're looking for a break of the inside day. You can add to that trend line breakover. You want to game it out, run the same scenario. If the market was to get bullish, what would that look like? Well, we're only up a quarter of a percent. So we would first look to challenge our own Globex high, then get through Friday's levels. Friday puts us at around 14,965, 62.65. That lines up really close with some pivot points in Thursday's price action. So it's a strong area of resistance that we'd need to deal with. Remember, when we're talking about these levels, you don't want to just draw some line at a previous pivot point and say, oh, yeah, no, that's support, that's resistance. Validate it somehow. Go in and take a look at the volume profile. See if there's any volume back there that would support your claim that this is a resistance area. You can see here on the 10-day, 30-minute chart, that's a very shallow zone right at the value area high. The value area high would be 14,950. But when we get above that into 15,000, there is a large amount of resistance volume there. We can see it on the volume profile. So it's not just randomly drawing a line at a previous pivot point and saying that looks like support, or that looks like resistance, or that looks like a trading zone. We can add some validity by looking at the volume profile. We are inside the box, but working towards the top like we're going to be moving out of the box. We're moving away from the point of control. The value area high has been known to be a resistance I don't necessarily see it that way, but you know, it certainly proves itself to be that more often than not. So an upside break is very likely to get hung up before we get to 15,100. Scenario two would be that we stay inside of yesterday's price action, those two yellow lines there, from 14,725 to 14,950, 14,975, right around in that area. It's a good 200-point range. Plenty of room to stay right there. I don't believe that, by the way. I just, out of all three scenarios, I find that one the least likely out of all of them. But it's on the table. If we were to start getting bearish, the Friday close and or the Sunday open would be an institutional pivot point that you definitely want to mark. Even though we've gone through it multiple times this morning, we'd still want to know where it is, mark it out. I don't expect that we would react or respond there now at this point, since we've already wasted all of that. But it's still worth noting. From that, we got our Globex low at 14,800 and then Friday's lows. If we just look at that and say, well, how far of a move to the downside would that be? We're talking about 1.25, and we are already up a quarter. So we'd give that quarter back and then go down a quarter. Finishing the end of the day down 1% would not be very surprising, right? That wouldn't even be considered bearish, really. We would just be holding the line. When you come out to the higher time frames and you start doing evaluative analysis on a monthly chart, right? We're in a new month. You want to see that. A weekly chart, daily chart. This is a weekly chart, and we have not yet printed uh, a higher low. We don't have one yet. It's very likely that we're going to get one. I mean, really, it's very likely we're going to get one, but we don't have it yet. So until we get a pullback and then a rally off of that pullback to give us a higher low, we don't have one yet. When we look at it on the daily chart, well, here we do have that higher low, right? So when you're talking about primary and secondary trends, primary trend is bullish, secondary trend was bearish. If we can print that higher low and then get a new high, I don't think they'll be able to say we're still in a bear market see those Morgan Stanley analysts say that that we're still bearish. But we have to get above that line first. So 15,200, which is just a little beyond the current week's expected move. Again, validity, being able to find consistency in the analysis, point to more than one thing. If we look at the way the sectors have been performing, this first row here is relative strength for the last week. And we can see, communications, jets, uh, minerals, mining, emerging markets, healthcare, real estate. Those were all doing really good in the last 5 days. Take it back over the last 10 days, try to find confluence, which ones were doing okay but got better, which ones were doing absolutely horrible and now are doing good, or which ones have just been doing good and are still continuing to be good. Things like, I'll say like IYR. It's been positive for 42 days, and not positive price action, but positive relative strength. We have a lot of sectors with a market maker move right now. That's something that is based on volatility. With the front level of volatility higher than the back level of volatility, it causes like an inversion. That inversion is where we get the idea of market maker move. So we have that, and then we have a very wide average daily range in a lot of these sectors. Before we leave Thinkorswim and go hunting around on TrendSpider and wherever, let's take a look at this move in gold and the dollar this morning. So the dollar just like woke up with a vengeance, but notice it didn't correlate with the dollar or with the VIX. That's really important. You want to very clearly recognize that there is no connection or correlation or pairing model in any way between the dollar and the VIX. And that's exactly what we have this morning. No correlated state. Bitcoin really hasn't done much anything other than settle down after the open. Gold started to wake up during that move. It almost seems like gold made the move and then the dollar followed. Oil back up to Globex highs, and the bond getting ready to break to new lows on the morning, while the S&P and the Nasdaq are getting ready to break through uh, Globex highs. That's exactly what you want to see, right? And when you have the S&P testing against a resistance zone looking for a breakout, you want to see the VIX testing against support looking for a breakdown. MMM is only applicable for the day. Every single day, the platform looks again and asks, is there an MMM today? And then it'll ask tomorrow, is there an MMM today? And then it'll ask the next day, is there an MMM today? So you can see that on SQQQ, for an example, there is a MMM right here. Where did it get that number? Because the April 8 options have a higher implied average volatility than the April 14 options. When this number is bigger than this number, you get an MMM. Tomorrow, if that number is still bigger than this other number, there will be an MMM yet again. If you're looking at something like SPY, and the series happens to be day by day by day, it can get a little confusing. It's not supposed to be measured on intra-week products like this. It's supposed to be measured on things that have Friday to Friday or month to month options. So, kind of take that with a little bit of salt. There's a really great article that it talks about that thing in detail. And I've pointed this article out so many times I need to just save the link. You go to the ticker tape. It's a publication by TD Ameritrade. And you type MMM in the box and do a search. There's like 50 or 70 different articles in here that explain it in so many different ways. How can we use it? How can we apply it? How have they used it before? But the one that you would want to read that says, what the hell is it? Is Ask the Coach, Market Maker Magic Move. It was written by Cameron May. He's one of the Thinkorswim YouTube guys in their new educational content series. He wrote this article a couple of years ago. It's a very useful article. It's a 5-minute read. Wouldn't take very long, and you would know so much more about the market maker move. This website will help you with all kinds of Thinkorswim related stuff and trading stuff in general. It's just a really, really great website. But the market maker move is directly connected to that average implied volatility. It's important to say that because I've heard professional people, I don't want to name them, and I'm not trying to call them out, but I've heard professionals. I've heard professional people talk about the market maker move and given a description that was complete crap. I mean, not even close to being real. It's like they didn't have a clue and was just pulling rabbits out of a hat trying to answer somebody's question. Wouldn't it be better just to say, I don't know, right? Somebody asks you a question, you don't know the answer, you just say, I don't know. I don't know the answer to that question. Don't don't open your mouth and chip your teeth and say a bunch of random crap that steers the person in the wrong way. So if you've heard videos or you've seen a webinar where they talk about market maker move and it's from a well-known source that you would trust, listen close. They got it completely freaking wrong. Completely wrong. Go read the article. You'll see why they got it wrong. Okay. Doesn't matter that they were wrong. We're all wrong. We all make mistakes. But if you don't know, you just don't know. Say you don't know. Look at the sectors this morning. What's hot and what's not. So emerging markets is up over 1.25% this morning. We use this for a global bias, right? If the global marketplace uh, does not have that warm, fuzzy feeling, the risk on sentiment, then this is not going to be up in the mornings, especially up 1.75% or 1.25%. Right. So it's a really nice, useful gauge in the morning. How bullish are we? How bearish are we? USO directly connected to oil and energy, SMH. There was an article that I think was on Bloomberg about uh, another nation getting into the chip sector or the chip industry. They're about to start allocating billions of dollars. We'll see how that bleeds over into the rest of the markets. Uh, both, all three energy names are up this morning. So USO, XOP, XLE. Jets are again up this morning. We see that name up. Seems like every single morning Jets are up. And yet, looking at this chart, you got to kind of ask, like, what the hell happens? Because it doesn't seem to stick by the end of the day. Now, this is a sector that I continue to get questions about nonstop. Every day, somebody asks, "Hey, you think it's a good idea to buy American Airlines or Delta Airlines or take your pick, Carnival Cruise?" They're just so beaten down in the charts. I feel like it's a bargain buy. I want to get in early. What do you think? What I think is that they have a really bad credit rating, and the amount of money it will take them to borrow money is just completely astronomical. They have bad management. They're in debt to their eyeballs. They're suffering greatly. Will they eventually come up out of these lows? Yeah, I mean, very likely. Will all of them survive? I don't honestly think so. I think one, maybe two really big names may be absorbed. Um, when you're bargain hunting, you want to be very careful about such things, right? Go in and look at their fundamentals. It's not going to be about the candles on those, right? It won't matter what you see on the chart. It's really going to matter who's running the company, how much debt do they have, right? So if you are looking at airlines or the cruise lines and you're thinking, you want to pick something up like that, if you've got the extra capital and you don't need it for the next 10 years, I mean, why not? But be prepared to give it to your grandkids or even your grandkids' kids because, it could be a while before it comes back around. The devil's metal is up this morning, silver, 0.5%. We did get that nice breakout, um, and then it just dumped, right? It just gave it all back again. It was the other day. Technology doing reasonably well. I was doing some work on the sectors this weekend. It was kind of interesting. If you look at the valuation on what makes up the S&P, right? It's kind of a generic question. What's the weight of the different sectors in the S&P? The biggest one, obviously, is technology. But, in the top three is healthcare. If you take the top three most weighed sectors in the S&P, it pretty much covers all the rest of the sectors combined. So you look at all 11 sectors, three by weight outweigh all the others. But we don't use healthcare as a risk on sentiment. But we really have to recognize its effects when we're looking at the FANG names, which I readjusted the FANG names. NVIDIA is no longer on the list, and Facebook is no longer on the list, mainly because of market cap. So now it's two Googles, Apple and Microsoft, and Amazon and Tesla. I think NVIDIA is on there. Yeah, double Google, Amazon, Tesla, Microsoft, and Apple. These are all just absolute monsters. Okay? Their market size is how that determination, for me anyways, was made. If you want to know about where to get the information on what makes up the S&P, you can go to fundamentals and type in SPY. Here is the top 20 holdings that make up that ETF. But then here are the industries broken out. So you can see that information technology makes up 20% of the entire S&P marketplace. In number two, in second place, healthcare. When you add consumer discretionary to that, you've got just an absolute monster amount of weight right there. And of course, to me, financials is a risk on sector. So we would want the financials, that's 4 sectors. But we don't use healthcare as a risk on sector. And that's just an odd pairing. I don't know what you can do with it. So you can see this SPY is basically flat. We covered that already by looking at the S&P. Cloud computing is flat. We really want to start getting into the other names. What's on the other side? We looked at what's positive, what's negative, right? We can see that Bitcoin is negative this morning. The rest of these negative names are only slightly negative. It's not even 0.5%, which is kind of my benchmark for seeing that something is up or down in the pre-market. It needs to move at least 0.5%. So, I mean, it isn't down 0.5% yet. It's close. It's not there. So we basically have nothing negative from my perspective. We do the legacy sectors, which we've done, and then look at any additional sectors that those cover. By the way, transport. Oh my gosh, that move in transportation last week was absolutely horrible. And anybody who studies Dow theory and realizes, the leading value of watching the transportation sector would really start to freak out a little bit. There's a great article on Bloomberg that kind of highlights that move lower. It's worth checking out. I think they covered it this morning in 5 things you need to know. So if you want to go to Bloomberg, that's a free 5 things you need to know. You don't need a Bloomberg subscription to get that. And they point, when you get to the bottom, what Joe is looking at, he points out that move in transportation. So the EV market this morning is lit up. We have nothing negative. We have some flat ones, but nothing negative. I like to break the chips out, take a look at them on their own, what's going on in the chips or in the semiconductors is what I hear it called often. It always throws me off every time I see the word semis. I don't think semiconductors. Every time I see that, I think trucking. So I call mine chips just to not confuse my brain. In the chip names, everything's looking really good. I mean, there are a few like ADI that are a little soft, kind of squishy this morning, and Texas Instruments is down. But for the most part, chips are looking really good. Crypto, I'll continue to say it because I know we have new people coming in every day that look at this. In crypto, this is not a list of crypto names. This is a list of companies that's either heavily vested in blockchain or heavily vested in crypto, right? So kind of worth recognizing why these names are on the list. I didn't make this list either, by the way. I didn't have to. I went to the Smalls Exchange. They have a crypto futures product, which is basically a basket of stocks. And I just opened it up and looked at what was in the basket, took all the names out of the basket, and built my watch list off of it. Makes perfect sense, right? Oh, I wish it was as easy of saying Green Friday, Green Monday, but that's not the way the world works. If it was that easy, then we would just all wait for Fridays and get a green day, and then bet the farm on Monday. Nope, that's not the way the ball bounces. Pot stocks this morning also looking really good. I mean, I don't want to say it's a mixed bag. Haha, get it? Mixed bag. But it's a little squishy in a few names. Mostly green though. Right? It's looking really good. We're basically looking for some follow through in some of these names from last week, where we broke outside of that Keltner. There is the volume, the anchored volume underneath us. We may find a little bit of support there. We are back inside the box, however, struggling. We'll see if it holds above it. So looking at the sectors, guys, we've certainly got a lot of opportunities this morning. You wouldn't necessarily have to lean into your own watch lists. You could just straight up lean into the names in the sectors. I mean, there's a lot of really good plays being highlighted. Just kind of keep in mind, you got to narrow the list down, right? You can't go into the open with like 20 names trying to watch all of them because you can't. You're going to just end up fumbling the ball. So you want to get the list down to like 2 or 3 of your top names, the best names on the list. And if you miss, right? I mean, I've certainly done it, where every name on your watch list is a dud and everything else is raining, but your names are not. Hey, go back and look at what made those names move and yours not, and try to figure out what you can do differently next time. One thing that I like to do is use the daily chart. So, something like a red to green setup, a trend line breakover, IX10 pattern, inside day breakout, something on the daily chart that gives me just a little more confluence that says not only is this moving in the pre-market, but I have this on the daily chart. If you get, say, 20 of those names that all have really good stuff on the daily chart, then start putting them in an order of liquidity. Who's got the better options? Which one has uh, better fundamentals? Find a way to narrow that list down to your top names. Look at the sector, the subsector, the industry, the peer group. Find the ones, get your list narrowed down 2 or 3 top plays. Let that carry it through the morning. I will be streaming in the futures this morning. So it starts at 9:15. I'll see y'all there.